Welcome to the Talk Tickers Brief. Today, we're diving into Alcoa's fourth quarter 2025 earnings. Now, on the surface, the numbers looked fantastic, a real home run, but the stock's reaction kind of fell flat. So the big question is, what did Wall Street see that wasn't in the headlines? Let's get into it. Okay, so right out of the gate, Alcoa drops this massive number. We're talking a 35% beat on adjusted earnings per share versus what analysts were expecting. I mean, that's a huge headline win right there. And that really brings us to the central puzzle here. You see a beat that big, you expect fireworks, right? You expect the stock to just take off. But instead, it just kind of stalled. So why? Well, to figure that out, we've got to peel back the onion and look past that big, shiny number. And taking a closer look, you can see just how strong this quarter looked. I mean, check it out. Adjusted EPS came in at $1.26, totally smashing the 93 cents Wall Street was looking for. Revenue beat by almost $170 million. And that adjusted EBITDA number, it jumped by a massive $276 million from the last quarter. So the key here is that on paper, this was an absolute monster of a quarter. But smart investors know that not all earnings are created equal. To really get why the market just shrugged, we have to deconstruct this beat. We've got to analyze the quality of those earnings. And this chart right here, this is our first major clue. Just look at the difference between the official by-the-book GAAP earnings of 85 cents and that much higher adjusted number of $1.26. Whenever you see a gap that wide, it's a huge signal that there are some significant one-time items that management has taken out of the equation. So what were these special items? Well, first off, Alco got a nice boost from some one-time CO2 compensation credits. Can't count on those every quarter. Then they had some accounting moves, like a $144 million non-cash charge and a $133 million tax benefit from Brazil. The key takeaway is pretty simple. A huge chunk of that amazing beat didn't come from their core business of selling aluminum. It came from stuff that's not going to happen again. And hey, don't just take our word for it. The pros on Wall Street sniffed this out immediately. This quote from BMO Capital Markets says it all. The beat was mostly because of that one-time credit. See, the market is always looking ahead, and it tends to ignore profits that are a one-trick pony. Now, the market's reaction wasn't just about the quality of these Q4 earnings. Context is everything. You absolutely have to look at how Alcoa's stock was doing before this report ever came out. And wow, this slide tells a heck of a story. Over the past year, Alcoa's stock was on an absolute tear, up nearly 69%. Now compare that to its sector, which was up just under 10%, and the S&P 500 up around 13.5%. This means a ton of good news and optimism was already baked into the stock price. Expectations were sky high. Okay, so we've got a low-quality beat and a stock that's already run up a mountain. The final piece of this puzzle came straight from the horse's mouth, from management. Their guidance for the next quarter, well, it painted a much tougher picture. First, management warned that its alumina segment is going to see about a $30 million drop in adjusted EBITDA next quarter. That's headwind number one. And then came the other shoe. The second headwind is even bigger. They guided for a $70 million drop in the aluminum segment's adjusted EBITDA. Ouch. So you just do the quick math, add it all up, and management is basically bracing everyone for a $100 million sequential hit to their earnings. And it makes sense, right? Those one-time CO2 credits are gone, and they're facing higher costs for restarting one of their smelters. That's a really tough combination. Okay, it's time for the verdict. We've pulled apart the earnings, we've looked at the market context, and we've listened to the guidance. So let's put it all together and give you our final call on Alcoa. So after weighing everything, the strong headline numbers, the messy details underneath, and that cautious outlook, what's our call on the stock from here? Here's our thesis in a nutshell. That Q4 beat was noisy. It was full of one-time items that kind of masked what was really going on. When you combine that with management literally telling you, hey, Q1 is going to be tough, and then you look at how far the stock had already run, well, the market's cautious reaction wasn't just logical, it was completely justified. And all of that leads us to our final rating, market perform. Now look, this isn't a sell call. The underlying price for aluminum is actually pretty strong, which helps them. But on the other hand, Alcoa is facing some very real cost pressures and risks right now. So we expect the stock to basically perform in line with the broader market, probably treading water until those headwinds start to clear up. And of course, as always, remember that this analysis is just for informational purposes. It is not financial advice.